Welcome back to another episode of the Isn't That Rich podcast. I am your host, Ashley McVicker, joined by my other host, Jared Gravatt. And today we are talking to Ryan Hallam from Pekin Insurance about the importance of key person insurance. So, Ryan, welcome on.
Thank you. We appreciate you having us on here to talk about key man insurance.
Okay, so why don't you first go ahead and tell us a little bit about yourself and just how you got into the insurance world, and then we can jump right into key person insurance.
Okay. Well, I've been in insurance my whole life. I mean, my dad owned agencies. I've got a biology degree, was going to go to med school, decided I was going to be in the insurance business instead.
Nice.
So, it kind of worked out real well. So I've been in that. I've worked for Pekin for 13 years. And basically my job is to help agents sell life insurance, as in key person, farm perpetuation, business perpetuation, long-term care, anything that their client may need.
Okay, gotcha.
Okay, Ryan. So the question we've all been asking, what is key man insurance?
So key man insurance is for a person that's in a business that if that person was no longer in the business, a key employee, key person, an owner, if they was no longer there, that the business would suffer financially because of not having that person there to bring income in, to their business.
Okay.
So let's kind of break that down. Does that mean, and with insurance, there's lots of fine lines in there. What are some things that would qualify someone to receive key person insurance? Like what type of loss? Is it someone just quitting?
So basically you could do a couple things. So a key person insurance would be if they were no longer there in death. That's the main thing. It's got a death benefit aspect. I mean, it always has a death benefit aspect to it. So you're always going to, if that person passes away, the business is going to receive a lump sum of funds that will help the business continue to perpetuate on even when they're not there. We can also set it up, which we do a lot of times, that they've got a cash value aspect of them, that cash value can be used to go out and hire a new employee if that person quits, or use the cash value to go ahead and keep the business running as a business loss of income as well.
Okay. So I guess my next question is, what person qualifies as a key person?
It's somebody that's just vital to the business. I mean, it might be an owner. It might be let's say you have an auto repair shop, somebody that's ASE qualified, certified, maybe a graphic designer, somebody that's their head graphic designer, an insurance agency, a bank. I mean, banks have key person insurance a lot of times on the employee or on the key employees. So if something happened that would be there. Anybody that's key to the business would qualify for a key man insurance policy.
So like me and Jared, we're key
employees,
because we're the personality hires, so we're the key people,
exactly.
Right?
Yeah, it's hard to find other personalities like us.
The PR department would not go on if you guys are here, so we will talk to Charlie about that.
Thank you for saying that.
Exactly. Yeah.
That's
we were
hilarious.
talking to him. We're like, there's not one on us right now. Like, we need to get on the ball here.
Yeah,
exactly.
You say you need me.
Yeah,
that's funny.
So is it only in the event of death, or what if someone has like a horrible accident where
there's ways that you can purchase key men, like a disability rider on insurance, or a disability policy. Sometimes banks would require that on loans, that their key person may have a disability policy as well, not only a life policy in cause of death, but also a disability policy that would be in effect that if the person cannot do their daily abilities, that the company can get paid as an offset.
Yeah. Okay.
I would love to talk about some maybe real life scenarios that you've seen with key person insurance that you distributed to a business.
Okay. Yeah. I mean, there's been times I know that we had I think a couple different ones that the business was saved because, there was a trucking company. The head employee was in an accident.
So one of their main drivers.
Was in an accident, killed. They were able to go ahead and go on though because of the fact that we had key employee insurance on that individual. It didn't stop the amount of time. They used part of those funds to go ahead and to hire another driver. Plus, it helped with the loss of income for the business in that time they were down.
Nice.
So,
awesome.
As an instance.
Yeah.
So it's not always just the owner. To me, it
no,
sounds like
it's not.
Really
it does not. It can be the PR people. Like I say,
it really
doesn't.
can.
Chef or
There's
someone like
no.
that.
I was gonna say I've talked
Head
about it
chef.
before. Head chef. That's one thing that we target. Head chef would be something because in a culinary experience, it takes some. It's hard to
Right.
find those people. What if you're at a golf course? The head golf groundskeeper. There's just a lot of different opportunities that are out there. Everybody has a business. Somebody is key to that business. Even in as much as everybody's got a key CSR that their business wouldn't run smoothly if that CSR was not there. That takes care of the day-to-day operations.
So with people like that, maybe are there different types of policies or I guess levels of policies that you can place on certain people? Like maybe some people really are worth more.
Sure.
I'm sure you would look at
Sure.
business
No, we can
valuation
different
and all that,
ways.
but-
There's different ways to evaluate it. You could look at the income method of replacement, which would be, whatever their income is for last year. The usual rule of thumb in the industry is 7 times for that person on a key person. There's also what's called a replacement cost method that would actually what it costs to go out and hire, retrain, more education, upkeep, and so on and so forth. There's different ways, yes, based on their need, where they need to be in the.
So do you guys figure that out? So let's say I'm a business owner and I'm wanting to go through the process. How does that work to get started? And then how do I know how valuable that
we could set that.
is?
Yes, no. Basically, what we do is at Pekin Insurance, we provide a service to come in and meet with your key employees, the owner of your business, and your key employees. Sit down with them to decide what the value is based on their salary, future earnings, any bonuses. What are they expecting to bring into the business in the next few years? So all of those are available, and we do all that free of charge for the client and help them build the best plan that's out there for them.
That's awesome.
Okay, so I have 2 questions here, and we're going to talk about the benefits beyond the obvious, like if somebody died, like you said, or whatever else happened to them. But could you kind of tell us how Keyman Insurance could be part of a succession plan?
Sure. So basically, let's say you have a policy that you've got a key person in your business, and down the road, we're expecting that key employee to purchase the business from you. We can have a cash value aspect of our. We can set that up as part of a cash value perspective in our life insurance plan. Down the road, we could use that cash value that's in the life insurance plan to go ahead and use it as a down payment to purchase your business. And we also could use that if they want to go to the bank and borrow the money. That policy has a cash value. You could use it as collateral at the bank as well.
Well, that's nice.
Yeah,
Okay.
I didn't know that.
All right.
Pretty cool.
it's a win-win situation.
So
Bye
Ryan,
here.
Yeah.
Here's my number.
Yeah. So Ryan, you've been involved in this in a long time. What would you say are some common misunderstandings that people have about Keyman Insurance?
Or yeah,
that
like
you've
how could
encountered?
they use it, or how could they maybe not use
Yeah,
it?
some things they don't know, or
Well, I
that
mean,
kind of thing.
first of all, it's way that not every policy, like we spoke about. I mean, if somebody's in an accident, you can't just have a life insurance policy, or you can't just have an accident policy. A lot of times, I mean, we get the things in the mail that say, "Oh, you're going to be covered for up to $300,000," but you have to be killed in an accident. This here, you have to have specific policies for the accident, or it doesn't pay for if the person has a heart attack or develops cancer. You have to have the disability policies and things like that will help pay those expenses. The life insurance policy mainly just pays for the death, or you can use it like we spoke about with the cash value and paying bonuses. You could give it the policy down the road as a retirement gift. We call it golden handcuffs. If they stay for retirement age or 20 years or whatever, the employer can say, "Hey, here you go. Thank you so much for being a valuable employee. I'm going to turn around and I'm going to give you this policy now. It's got X amount of cash value. You can cash the policy in, or you could go ahead and keep it to maturity. And when you pass, the money will go to your family."
Wow.
Well, that's a nice benefit
That is
of it.
nice.
Could the employer keep it?
They can keep it.
Ooh.
Yeah, they're basically
But I guess if they wanted to, they paid for the policy. so.
That's a very valid point. So they have to have
I
an
get it.
insurable interest at the time, and,
Yeah.
and they can, at the time of application with the policy, but they have the ability, the client or the employee would sign a thing knowing that the employer took a life insurance policy out on them or a disability policy.
What are some things it doesn't cover?
Once again, it would cover, it depends on the policies. Once again, if you have a life insurance policy, it's not going to cover sickness or being in a car wreck or,
Does it cover if someone just quits?
No, it does not. You cannot insure against that, unfortunately.
Okay.
Yeah.
I know that sounds like a very obvious question, but I am
No,
wondering,
it is. And that's a very valid
put these
question.
policies on people, and the next thing we know, boom, they quit.
It happens. And I mean, the good thing is when those things happen, it doesn't actually pay the employer, but if it's got cash value in it, the employer can then take the cash value out of there and use it to help offset for the cash flow that would come into the business when they were not there.
So they could cash it out even if so someone quit. You can't use the policy how it's
designed for a death, but you design it where you can use the cash value of the policy to go ahead and get that money back out. Go out and you're looking for a new employee, you could use that cash value to bonus a new employee.
That's
nice. To come to work for the company.
What are some tips that you have for employers for choosing the right policy?
Number one, obviously, you would look at their budget, the cost basis. What are they looking for? How long are they wanting this person to be covered? Are we looking for 10 years? Or are you wanting them to work till you got a 40-year-old? Say, hey, I want you to be here till age 65 as a retirement. So, that'd be a couple things. We can design it to do about whatever the employer wants to do based on their needs.
So it's really just sitting down with your agent.
Sit down with your agent. Your agent more than likely will get somebody like me, a life specialist with Pekin, to come in and sit down and give the best options to your client.
So what would you say, we have a lot of business owners that listen to this podcast. What would be like your biggest piece of advice to our listeners today?
Everybody has a key employee, and every business has a key employee. Like I say, whether it be the CSRs to the presidents to whoever, everybody's key to that business. There's a lot of those people that cannot be, especially in today's job market. Retention is huge. And trying to keep people in the business. We use key employee policies a lot for retention. You're providing them a benefit down the road if something happened. We could set these policies up to be a benefit not only for the business, but you could split the beneficiary the amount, or part of the beneficiary, if the guy passed away, the lady passed away, that part of the proceeds could go to the business, part of it go to their family, so you can use it as retention benefits. So there's just a lot of things. I mean, everybody has a key employee that their business would suffer and they were not there. It's a very inexpensive part of, and I always tell everybody, let's just figure that's in the cost of doing business. We can figure it in some way, and it's just overhead and try to work out best for your business and what would happen if one of you guys were not here.
That's
Could this
right.
podcast go on?
That's right. Well, sounds like it's kind of a win-win and
It's
a pretty
win-win.
Yeah.
easy policy to implement.
Yes,
and
very easy.
Kind of a no-brainer, I think.
It's a no-brainer. I like I say, I encourage every business owner to get one on their key employees. If it be one, be seven. The thing with key life insurance policies is you can pick and choose. The employer doesn't have to give everybody the same plan. I mean, if they don't have to insure everybody in the whole company that way. So, but if you're doing a key employee, you can pick who's the most valuable, or who do you want to stay the longest and as additional benefits.
Yeah.
I love it. So there's no specific industry that needs it. Every
industry needs it.
So
I mean, just look around. I mean, if you look around businesses around town, everybody has a key employee in there that keeps everything running smoothly.
Right. Absolutely.
It's good.
Well, Ryan, thank you so much for
Thank you.
taking time out of your day to come talk to us and teach us about Key Person Insurance. And thank you all for listening today. We will see you next week.
Thank you.
So, Jill, where do we go from here?
Be sure to check out our show notes for this episode, and also be sure to follow us on social media and subscribe to our newsletter. And we'll see you next week.
See you next week.